Welcome to the second part of the WinForecast presentation. Having completed stock, what we can now look at is an example of how a wages record can be put together. And that is simply by entering the wages record. We have several options under there. We can just enter the wages dollars, $1,000 a month, PAYE is $300, gross wages therefore is $1,300. We can use what's called a profile, or we provide a very nice feature called an employee list, which allows you to enter each of your individual employees, and they earn $24 an hour, 37.5-hour week, attached to a pension scheme Kiwi 1%, Kiwi Saver 1%, and commission of 2% of sales, which calculates automatically on the fly as we go. We then add number 2, the accounts person, and they're on a monthly retainer of $2,000. I better pay them a bit more than $2,000, and that's so you actually see right now this is calculating the employee less gross wages as well as the calculated PAYE. So we are currently holding the PAYE tables within the system. Under the options, you've got your default payroll tables and your default payroll options. So an example of the options is such that our PAYE is paid twice a month or monthly that are applicable to your current PAYE scheme. Purchasing as a cost type record can simply be entered as a percentage of sales, and we've got 3% for a purchaser's landed cost or similar to like that, and that's paid up front 1% one day. It's another method of entering the data. So we're moving into advertising, or our marketing expenses, just to continue the sample of the record types. Advertising is a percentage of sales. Product A and C, we allow a 5% budget, and we use a payment profile of 50-50. Okay, so we'll go through that record. Staff for marketing, we have a $2,000 a day month retainer for staff and $400 GST. Very simple. Rebates, an old marketing trick, which are not a wages record. So this, when you created the rebates, I left the next default type. I can then just change this back to cost, enter data, and we can budget for $10,000 in the year of rebates, and because I've entered it in the total column, it splits it out there, but we pay those out twice a year, $500 here, $5,000 there, and $5,000 there, and I would need to include the GST. What I can then do is, that's a little bit complex, I can set this up as an accrual record. So as an accrual record now, I get it as an accrual, enter the cost there monthly, but we get the invoices 6 monthly, starting in June or similar. So you can see here now, our payments can be now set up as use 35 days credit, and this split tells me that we're actually invoicing evenly during the month, one of the other system settings. So now I've got an accrual for rebates into my balance sheet without having to do any more than determine it to be an accrued prepaid cost. Rental, which I set up as a prepaid, we can change that to a prepayment. We're paying $2,000 a month, and we get the invoices quarterly or similar like that. So it's a prepayment, that'll establish this. Power bill is not an accrual. Change it back to a straight cost, enter the data, $400 a month, payable 14 days, simple as that. So we've continued to add in different types of expenses or additional things. Another item is we can actually facilitate, we provide is what's called sub-items. So we've got our section head, our record heading, and we can actually create a third level, which is a subtotal, which allows you therefore to turn these into sub-items. Okay, so I can't change that. Sorry, that's right, stock records. We'll just take these out of this selection and turn it into a sub-item, and again that into a sub-item, which is detail 1. I will load some data in this just very quickly because it'll show on the report the ability to drill down to these levels. Moving into the balance sheet items, plant, we will acquire a $10,000 of plant in the first month. We will pay for it in 30 days and we will depreciate it at straight line 25% per month. We can also sell it, enter gain and loss and receipts and all that. So fixed assets provides you 4 types of assets. Fixed assets, financed asset, which is a hire purchase, a loan made as if you're a lending company, and a manually entered loan. Bank borrowing gives you an example of a loan. We'll borrow the loan in May. We'll pay monthly in arrears. It is callable. It's $20,000. It's going to be for 36 months. And our interest rate's 9%. And as you can see, $20,000 the payments is a little bit more than $635 a month. We can also support a bullet, balloon or a holiday as part of the features. Okay, and finally before we move into the last stage of this, the shareholders and loans, they're bringing in $1,000 a month and we're paying it back at $1,000 a month. We'll calculate a little bit of interest on it and every so often we might put some more money back into the business. So that's set up the main core of our records. The formal process normally would involve entering the opening balance sheet so you can actually bring forward the opening transactions, a prior year P&L to help you with that. So what we're able to now do is save this on the desktop, demo, forecast. Right. I can also now save as and then manipulate the copies with that, and we have some various options from within here. Okay. So in the next section we will look into reporting and actual reporting and finally seeing the results.